Hello, everyone. This is Castro here at YS Stocks, right? I hope that you guys are doing great. Just wanted to go over what happened last week in the market, this past week in the market. A lot happened, right? We noticed that the market opened a little bit bearish on Tuesday, given the Independence Day holiday, and then it closed to all-time highs, right? I mentioned in the last video that a lot of reports and news was actually coming out. And so let's go through it, right? So last week we saw a few things. As I mentioned, last week started on the 5th of July and it closed out on the 9th of July. So the 5th of July was Independence Day, so that was a holiday, so the market was closed. So what we saw for reports on the 6th of July, Tuesday, we saw the market services, PMI, and ISM service index. And those numbers actually came a little bit lower, right? The PMI number the actual number came a little bit lower than previous and also expected. And the June ISM service index numbers came a little bit lower as well, right? Just to recap what those numbers, or at least what these acronyms mean, right? So the U.S. Service Purchasing Managers Index, or the PMI market services, pretty much is published monthly, all right? And we know that 50 signals improvement and below 50 signals improvement, and below 50 indicates deterioration. So, and the reading that is stronger than forecast is generally supported bullish for the US dollar, and weaker, right, you can expect it to be bearish. So if you notice, the numbers were slightly a little bit lower, right, than forecasted. You can imagine that the market probably reacted a little bit, harsh, and it was a little bit bearish for that trading that Tuesday, July 6th. And the ISM numbers, this is the survey that is part of the ISM report on businesses in manufacturing and services, or PMI, as we call it. And it measures the business activity of the overall market. And I said 50 indicates growth, while below 50 indicates contraction for this number. So it was slightly lower than expected. So again, let's see how the market reacted towards that number, right? So we're gonna see here, we're gonna just check out the S&P 500 for last week, right? Boom. So we're on trading view right now. Okay, not that. Let's see here, boom, right here. Yeah, right there. So it's trading view, right? So and you can see the date here. So this is May 2nd. I mean, not May 2nd, July 2nd. So the previous week closed with July 2nd, and it closed with new all-time highs for the S&P 500. And you notice that every week it's been doing the same thing, closing with newer all-time highs. So Tuesday opened up a little bit lower, right? The previous week on Friday closed at $433, roughly 71 cents. And on Tuesday, it closed at 432, just slightly lower, probably because of the news, the PMI numbers, and also the ISM service survey numbers. And we saw it trade a little bit higher on Wednesday, right? And Thursday, it fell, right? I wonder why it fell, right? We'll check that out here in just a sec. So it fell Thursday. So this here was a really, really good buying opportunities. And as you can imagine, right, all the retail investors, right, and also smart money, as they call it, were buying here at the dip, right, buying a little bit lower. And that's why you saw Friday, the market really rally. S&P 500 rally, QQQ, the NASDAQ rally, and also the Dow Jones rally, believe it or not, to establish all-time highs, right? So that's this is just the S&P 500, and it's the same thing for the other indexes, believe it or not. Let's see. So let's go back to, where are we again? Bam, right here. All right. So Thursday, what happened? We got the initial jobless claims numbers, right? And those numbers were higher. No good, right? So hence why the market, right, took that to the chin, and it was a little bit low, traded a little bit lower than the previous day, right? Continued jobless claims. Look at this, right? No bueno, right? and it was reflecting quite nicely on the market when it dipped tremendously. So, and what do we see on when the market dipped on Thursday, right? Many investors really rushed into buying that dip, right, for Thursday declines. And of course, they realized it wasn't not going to be a continuing trend. So we saw Friday, the market really rallying with good news and the economy recovering. It lifted stocks higher for Friday, and kind of overshadowed the any worries about President Biden's executive order to limit corporate dominance, because the market just rallied. Right. Let's see here. So let's go on to next week, right? What are we expecting for next week? What do we think we're going to see? So next week has a lot of reports, especially for Thursday, right? A lot of stuff going on, right? Just to focus on these economic reports and federal speakers, right? And on top of that, we also have the financial sector is going to be reporting earnings. So we're talking about JP Morgan, Goldman Sachs, right? Talking about Morgan Stanley and so on and so forth, Bank of America. So a lot of earnings coming up in next week, and also the week after, right? At the end of July, we have the FANG, right? A lot of stocks from the NASDAQ QQQ, which is actually trading higher too, are going to be reporting earnings as well. And I'll show you a trade that I actually got into a few weeks ago with the QQQ that I've been in for about 2 weeks now. I'm probably going to get out of it in about a week or so. All right, so let's go over all these. For educational purposes, I'm gonna go over what exactly each and every one of them are for the most part, right? Not to insult anyone's intelligence, but I believe in teaching people how to fish, right? It's really important to me. So the NFIB Small Business Index, right? So this is the National Federal of Independent Business, right? In the country, and it's scattered across every state and every industry grouping, right? So last month, the index fell by 0.2 points in May to 99.6, right? So it fell just slightly, right? And this measures the monthly job reports, right? Which was a record high. 48% of owners reported unfilled jobs. So the numbers just fell just slightly lower. So you can imagine how the market reacted to that. And they also saw a slight pause in the recovery, small businesses optimism after it was at a steady incline for 2021. So it fell just a little bit. Right? So we're going to see that number from the main number 99.6. We're going to see what exactly the action number is going to be for June on the 13th of July. Right? So 1, 2, 3, we have the consumer price index that going to be reported before the market opens. And we also have the core CPI numbers. And after the market opens, we have the federal budget. So the consumer price index, this is reported by the U.S. Bureau of Labor Statistics. And it measures the average change over time in the price paid by urban consumers for a market basket of consumer goods and services, right? All the goods and services. The average price data for select utility, automobile, fuel, and food items are also available for this as well, right? So we get those numbers. Yeah, that number, so I say the actual number for June on the 13th of July. In addition to that, the last one that we get before the market opens, the core CPI numbers. The changes in the price of goods and services, right? Excluding food and energy, of course, because we already talked about what the CPI, the consumer CPI actually covers that. And it is the key way to measure changes in purchasing trends and inflation. So hopefully that number looks promising. And just a key note, the higher than expected reading should be taken as positive or bullish for the US dollar, okay? And while the lower than expected reading should be taken as negative or bearish for the market or the US dollar field. 1400 2 o'clock, we get the federal budget. So this is pretty much covering the expenditures of what money is going to be allocated for the economy, right? So we get those that number, that specific number, around 2 o'clock or 1400. Right. So moving on to Wednesday, July 14th. What do we have there? So we have the producer price index. We should have that number right before the market opens. And during the market opening, during market hours, we're going to have the beige book number. So we'll see what those numbers look like. So really, I want to focus on this one here, which is Thursday, July 15th. We have a lot of reports, right? You have the initial jobless claims numbers, right before the market opens, and also continued jobless claims numbers, import price index, Empire State Index, Philadelphia Federal Index, industrial production and capacity utilization rate. So all these reports right before the market opens. So expect a lot of implied volatility for the market, really possibly the day before, and the morning. Well, really, depending on these numbers, the market should either be extremely volatile, but we'll see what happens, right? So we know the initial jobless claims numbers are. I talked about it in the last video, so check that video out, share it with your friends, and if it's informative, just give us a like, right? And subscribe to the channel. Continued jobless claims numbers, those, we know what those are too, right? So the import price index, we want to talk about that. So right, we can't talk about import without export. So, and this measures the changes in the price of goods and services purchased from abroad, right, by U.S. residents. So that's imports, right, coming into the U.S. And the exports is sold to foreign buyers. So that's, going away from us. And this is updated monthly, as you guys know, by the Bureau of Labor Statistics International Pricing Program, IPP. And it's used to deflate government trade statistics, predict future inflation and price changes, set fiscal and monetary policy, and measure exchange rates, negotiate trade contracts, and identify specific industry and global price trends, right? So we have to pay attention to the price trends because inflation is generally bad for both bond and equity markets. So we got to pay attention to those numbers. The next number that we have, the Empire State Index, right? That one was 17.4 for the previous, and this here is the relative level for the general business conditions for the New York State, right? And a level above 0 indicates improving conditions, and below, right, indicates worsening conditions. So the number last month, well, the number for June was 17.4, so that was good, right? And the higher than expected reading should be taken as bullish. So if that number is higher than 17.4, we can expect the market to react accordingly, right? So, and the lower is expected to be negative or bearish for the U.S. dollar, right? Following on, we get the Philadelphia Federal Index number, and this is the Federal Reserve Bank Index measuring the changes in businesses growth covering Pennsylvania, New Jersey, and also Delaware region. So we'll see what those numbers look like. Moving along, industrial production. So this one here measures the output of the industrial sector of the economy, right? So the industrial sector indicates manufacturing, mining, and utilities. So although these sectors contribute only a small portion of gross domestic product, they are highly sensitive to the interest rates and also consumer demand. So we'll see what that number looks like for June, given that the May numbers was 0.8%. And the last report that we're tracking here is the capacity utilization rate. So this one here is the most relevant to industries that produce physical products than services, right? Keyword physical products, right? And this is used to track the how industries are performing, right? Given the current economic environment, right? Yeah, so that's it for this one. So Friday, let's see what we got for Friday. We got the retail sale numbers for June, right before the market opens, and also we have the retail sales excluding autos right before the market opens for June too. And both of these numbers have been negative for for the month of May. So, hopefully we have good numbers going into June. And right after the market opens, we have the consumer sentiment index, right? And this is the one for July. So the previous was 85.5. And this here's an indicator that measures how optimistic consumers feel about their finances and the state of the economy. Very, very important, right? So it's a economic output as measured by the GDP here. So let's see. And the last report that we're tracking is the business inventories, right? So this year, the one for April was 0.5. And it's an economic figure that tracks the dollar amount of inventories held by the retailers, wholesalers, and manufacturers across the US, right? And it's compiled by three sources. We have the monthly retail trade survey, the monthly wholesale trade survey, and also the manufacturer shipment inventories and order survey, right? And this number is actually released by the Department of Commerce, and it's an indicator for goods production may slow down or increase in the future. So keyword, right? Indicator that goods production may slow down or increase in the future. So we'll see what that percentage looks like for Friday, July 16th. So that's a lot of reports, as I mentioned, right? Monday, July 12th, all the way to the 16th. And I will say again, mark on your calendar the 27th and also the 28th of July, right? The Federal Reserve, right? They're gonna come and address the inflation and talk about some other items in their agenda. So mark those key dates. Very, very important dates. Okay. So another thing I wanted to share with you guys was earnings, right? We have a lot of companies reporting earnings. So we're going to check out FinViz right now. Let's go to FinViz and see FinViz. What's the heat map for FinViz? Right here, right? This is finviz.com. And if you go to FinViz and you go to maps, of course you have to have an account. And if you don't have an account, I have a link underneath on this video. So after you subscribe and you like, right, click on the link and you can actually, I get a small commission for this just to share this education information with you guys. And this is a really good, helpful website that I like to utilize all the time, whenever I'm trading, investing, or I'm actually teaching. So we're going to look at earnings. If you click right here, you go to all the way down to earnings day, right? You're going to see a cool little legend here on the bottom, right? Minus 30 days, negative 15 days after earnings, before earnings, plus 15, plus 30. So you notice pink, right? That means these securities or companies are going to report earnings in the next week or two. These are not all inclusive, of course, because you have Google that reports earnings at the end of the month, end of July. For some reason, it's not pink. I don't know what's going on. So it's Amazon, right? So it's Apple, where Apple is, Microsoft. But really want to shift your focus to the financials. And I've been on, well, my YS stocks, our members have been on financial sector, investing into earnings for these. And a lot of community members have actually done well, right? We saw JP Morgan and the other diversified banks actually rally on Friday, and just like the entire market did. But be on the lookout for this sector here, the financial sector, reporting earnings next week, which is those key dates that I gave you, the 12th to the 16th of July. And also the rest there are pink, right? As you can see, the FANG stocks, right? Facebook, Apple, Netflix, right? Google, right? All report earnings, in Microsoft too, report earnings at the end of July. So, which takes me to, and I'll show you this a little bit later, a trade that I've been in for about 2 weeks, which QQQ, right? It's been traded higher for the last like 3-4 weeks because of these securities having earnings. And I think the outlook of going into growth stocks over value stocks. So if we see the performance here for, last week, right? What I really like about the financial sector is because in the last week, really the last month, the financial sector has really been taking a really good one to the chin, right? So they've been trading down for the last week and also the last month, right? So I always like securities who are trading lower going into earnings, right? That's just one thing, criteria that I try to take a look at. And you notice that on Friday, right, they rallied big time. So the financial sector was like on fire, right, in comparison to the other sectors, the technology, consumer services, and so on and so forth, right? So I really think going into next week, I really think this sector is going to do well, but we'll see what happens, right? So let me show you a trade that I got into. Boom, let's go here. This one, yeah. Trade that I got into here. And this is QQQ, right? As you guys know, most of the securities in the QQQ, investor QQQ or the NASDAQ or tech stocks. Talking about the FANG, Microsoft, the Apples, right? So we had some resistance here. We've had resistance here for quite some time. Boom, right? At $341, right? FANG was rejected. It bounced right off the 20-minute the 20-minute moving average. Then it retested 341 again, only to fall back, right? And knowing that the FANG and the rest of the sector was actually going to have earnings at the end of July, I actually joined in the trade right here. See, you can see this. I think you can see it better here in this one, matter of fact. I got in this trade when this is the weekly chart, right? Each one of these candlesticks represents a week. I jumped on this trade about a few weeks ago when QQQ, right? Investor QQQ broke out this resistance area, right? So I got in it right here. Actually bought it at 340, 345, I think it was. Yeah, I bought it at 345. And I've been in the trade for a while now. It's at 360, 361. Not exactly sure how far it's going to go, to be honest with you, but I'm going to be in it for like another week. I bought like 20 calls on this particular ETF here, and we'll see what happens, right? I'm in the money. I'm actually doing really well on it. I'm at 300% right now, so we'll see what happens in the next week or so. Besides that, let's see what else I have to share. That's really all I had to share with you guys. I hope this was informative. I hope these educational videos are something that you want to see. If you want to see something else, just let me know. Just put a comment below. But right after you like it, you subscribe, right? And you leave a comment and you share with your friends. So I always say, see you at the finish line, because this whole investment thing is us running our own race and educating ourselves the way that we can. So I will say again, and say, see you at the finish line. I hope that you guys have a good day, good week, and it's YS Stocks, right? Castro signing out. Have a blessed day.